Hello everyone, hello everyone. Let's get started in about a moment after we have listened a little bit more to the beautiful Amsterdam Crypto Alliance music. Yes, and as always, I'm trying to show you exactly how I live the crypto lifestyle together with Andrea. And it is really important to me that you learn from someone who actually truly lives this crypto lifestyle, which consists of a lot of flexibility, a lot of health, and a lot of energy. That is what we all stand for, and that is what the crypto lifestyle is. So if you're curious, then just go to the landing page crypto.lifestyle and sign up for the newsletter so you can stay up to date on what I am up to. You see here on the story that I posted yesterday on my Instagram account, Andrea and I went to an ice bar. I'm not sure if you've ever been to one. It's essentially a bar inside of a deep freezer, and everything is built with ice. So when we got into the first entrance hall, if you will, we received 3 tokens, and those 3 tokens would be used to pay for our drinks. And whenever there is such a situation where we have tokens, I cannot help myself but make an analogy between the token and crypto. Because people ask me so often, I just don't get it why this abstract concept of a digital coin would be used to pay, and why would people actually accept that as tender. And then I tell them, listen, depending on where you go, and you see us here in that hall, depending on where you go, you get literally plastic tokens, and within that realm, within that business, that token is worth something, and in this case we were able to exchange it for drinks. So as we entered into the actual ice chamber, which you will see here in a moment, we could use those tokens to exchange for drinks. And I'm going to use this here also to explain a concept referred to as liquidity, because one of my viewers asked me, what does it mean when there is liquidity in the market or not? And I think here, with this example that I'm going to bring up here, you will exactly understand what liquidity is. So here you see us go into the ice chamber. So everything is icy. We have our warm jackets. By the way, let me know if you've ever been in one of those ice chambers. And imagine now that we have our little tokens, but everybody wants a very specific drink, a very specific Amsterdam drink. Okay, here you see it was negative 10 degrees Celsius. So they had a very good drink that was called Amsterdam. Okay, and everybody wants that drink. So you have the token to buy the drink, but there's not a lot of those drinks available because they did a bad job in buying all the supplies to make the drink. So imagine now that you have a market, and the desired thing that everybody wants is the Amsterdam drink, okay? And you also have a coin that is perfectly valid for you to exchange for that drink. But there are not a lot of drinks around. So you can afford the drink with your token, but for whatever reason, there are not enough drinks around. So that means there is low liquidity in the market. Low liquidity of Amsterdam drinks. That is, of course, a very bad thing, right? Because you might have something in your hand that gives you the right to get what you want, in this case, our drink, but the market doesn't work because there is not enough liquidity. So I think you understand now what this means to have liquidity in a market. And here is a very, very cool thing to know that a lot of people don't know. is that you can be what is called a liquidity provider. So what does that mean? Well, you could go and say, hey, I'm going to help that bar have enough supplies to make that drink every day. And in return, they will give me a cut of their business profits. So that is something you can do in decentralized finance, and it's very, very powerful. And if you want to know how to do that, because it is truly a way to build constant cash flow, no matter what the market is, whether it goes up or down, you need to join my mailing list, crypto.lifestyle. The address is blended in. Now let's see, there's a comment here. Andrea is laughing, not a deep freezer, but that is exactly what it was. By the way, here you see the coins, here you see the tokens, okay, that I was talking about. So if you are interested in those liquidity provision things, type liquidity into the comments so that I know that you are interested in being a liquidity provider. Something very, very powerful. Now, I know you might be a little bit surprised. Why am I showing the ice bar in Amsterdam? Whereas the title of the show was something to do with the Fed, I believe. Yes, we're going to talk about the Fed today. And also, I'm going to talk briefly about moving averages, because they are one of the simplest ways to trade any markets, really. And if you are disciplined and if you have enough time, you can use those moving averages to really, really focus on a simple strategy that gives you returns, okay, that gives you true results. But before we do that, let's talk about the Fed. As you know, the Fed had maybe you know that, the Fed had a meeting yesterday, and about every 8 weeks, I believe, they have a meeting, and they basically make a statement about the health of the US economy. And it's really very powerful to see and realize that the US economy, the health of it, directs most of the financial aspects of the entire world. And it really deserves understanding what the Fed does. Yesterday, I was trying to understand a little bit better who is the chair of the Fed, Jerome Powell, and also what amazing or insane forces are pressuring upon him, right? Basically, the man has a job that is almost impossible to do right, because in a way, the roles of the Fed, which are the mandates of the Fed, are in contradictive nature. It has a dual mandate. On the one hand, it needs to make sure that there is price stability, okay? So that includes keeping inflation in check. And on the other hand, it has also to make sure that the employment rates are at healthy levels. So if you understand a little bit about the economy, you will also understand that these two goals can be at extreme opposites of interest. Okay, so because when everybody has a job and so on and so forth, then people spend a lot of money. And when people spend a lot of money, then prices increase, because businesses think, wow, everybody has money, right? Let's increase prices. And that leads to inflation. But the Fed also has a role to keep inflation in check. So then it needs to do something to fight inflation. And typically it does that by raising interest rates, because if it is more expensive to borrow money, then you will spend less money, right? So you can see how it is a little bit contradictory in nature. And I will be very honest with you, I would not want that job. I would not want to be the chair of the Federal Reserve Bank. Yes, it is a bank. It's literally a central bank that represents the United States government. Type in the chat if you want to be the chair of the Federal Reserve Bank. I'd be very interested if you would be interested in that job. It's a very demanding job. And what I like about Jerome Powell is that he has a background in law. He is a formally trained lawyer, and he also has some business experience, right? So he has a very pragmatic and entrepreneurial approach to dealing with his job, whereas former leaders of the Fed had more of a academic approach. So again, the man can't do it right, but he can also, he can do a lot of things wrong if he were to make decisions that are not good for the U.S. economy. And if it's not good for the U.S. economy, you know by now it's not good for the world. Yeah. Okay. So let me bring up again, why am I even spending so much time today talking about that? Is because every time when the Fed has a meeting with the FOMC, the traders and investors really look at that meeting and they're trying to find out what's the future look like for the US government and its monetary policies. And based on that, you make certain decisions, right? And it always comes down to, our risk assets, high risk assets, are they favored or not favored? Essentially, that's what you want to know. And I think it would be a very bad decision as a long-term investor to bet against the Fed. That would not be a good idea because the Fed controls the financial might of the United States. So does that make sense? Does that make sense? Type in yes in the chat if it makes sense. I know it's kind of a difficult topic, isn't it? So I brought to you today a slideshow and you're going to go to school with me here because we're going to try to understand the Fed and also later look at trend trading with moving averages. Okay, this is something that I explain in way more detail when you attend one of our boot camps. And the only way to attend the boot camps is to join our mailing list, crypto.lifestyle, and wait for the next version of the boot camp, of course. So back to the Fed. What is the Federal Reserve? It is a central bank, okay, from the US perspectives, the nation's primary financial authority. So it has a lot of authority and it has a lot of independence. To the current president's dismay, by the way, President Trump wants the Fed to lower interest rates, but the Fed is not willing to do that right now, which is why President Trump says, well, you just wait. I'm going to wreak some havoc by introducing tariffs, and that will likely increase prices. And I told you earlier, one way of decreasing, of fighting inflation is by lowering the interest rates, right? Knowing President Trump, he doesn't like losing. So I think he will not give up on that game, which of course is in the short term gives a lot of pressure on the markets. And that's why for high risk assets, i.e. Stocks and Bitcoin, a lot of experts have a feeling that the bottom is not in just yet. And maybe even we don't even talk about the bottom is in, but maybe we go into a little bit longer bear phase of the market, right? And the question is, of course, well, are we in the bear phase? Are we in the bull phase? And that is where these moving averages come in quite handy to determine that. Not that it would be just one metric that would help you determine it, but it gives for the layman a pretty quick impression of which is a good educated guess of whether we are in a bull phase or a bear phase. So the Federal Reserve also has a monetary policy, of course, as part of its mission. That's one of its big levers, right? Monetary policy. So that means it controls interest rates and money supply. So how does it do that? Well, it sets the base rate at which the regional banks and the state banks can borrow money from the central US bank, right? And of course, in order for every other bank to be competitive, they need to adhere to that. The other way, money supply, so interest rates is one lever. The second lever that is very powerful is money supply. So how does it control how much money is in circulation? Well, it is a central bank and it has a balance sheet. And on its balance sheet, it either has a lot of assets or it doesn't. So let's think about this. If the bank has a lot of assets on its balance sheet, it needs to pay for these, right? Meaning it pumps money into the economy. On the other hand, if it has very few assets on its balance sheet, we are in the opposite situation because it's not buying anything, okay? It's not buying anything off of the market. Then, of course, and we'll have another slide going a little bit more into that, because this quantitative easing, as we call it, or quantitative tightening happens to be very, very important for price prediction of high-risk assets. And that is the case with crypto, where high-risk assets. Then, of course, we have regulation oversight and maintaining of economic stability that is important for the central bank. So how often does the Fed meet? There are 8 meetings per year, about 6 a week, and they are always important for you to mark on the calendar. Always very important for you to mark on the calendar. And if you don't want to miss these meetings, just simply follow my channel. And yeah, by the way, make sure you subscribe, you like, you share, all of that good stuff, so you are always up to date, and your friends as well. So there are these FOMC meetings, and that stands for Federal Open Market Committee. And in that FOMC meeting, those decisions are shared with the public about where things are going in their eye. And of course, again, two aspects matter to the public. Everybody wants to know, are interest rates going to go up, stay the same, or what most people want is a rate cut? Let's get the money cheaper. Let's get it cheaper to refinance our mortgage, for example, right? And the other aspect is are we going to increase or decrease the balance sheet as the Federal Reserve Bank? Makes sense? Great. So there is something called the dot plot. And that is also an interesting document because it shows what the members of that FOMC meeting think will happen in the future. And the dot plot is a document that is publicly available. So I took a screenshot of the dot plot here. As you can see, this is very recent. This is from yesterday. And each blue dot represents a member of the committee, and it basically represents where that member sees the interest rate by the end of the year. Okay, so and then each time the FOMC has a meeting, a public meeting, everybody kind of looks at how has that dot plot changed. Of course, if it has changed in favor of lower interest rates, then that is very, very cool because, well, at least for most people, it's very cool because it means that the interest is borrowing money is cheaper, essentially. So that is something that you want to always look at as well, the dot plot. So here it is. And as we see here on this slide, it gives market guidance. It's also a trading catalyst. There are traders who literally focus on being live on that FOMC meeting when it streams live, and then they trade alongside with the markets, because if there are good news, then the markets react immediately. If there is an announcement that even sometimes that there's only the intention of cutting rates, or that we plan on stopping quantitative tightening, right? Or we plan on slowing down quantitative tightening, which is something that was announced yesterday, by the way, that they are just slowing down the pace of QT. It's known as QT. So these things move the market sometimes only for half a day or a day, but you can trade those. And basically, each time there is a FOMC meeting on the calendar, you mark that on your calendar and you make sure you trade along with the live stream. So here are the way the Fed affects the market. So when we have rate hikes, which means higher borrowing costs, okay, so they increase the interest rate, that is not good for stocks. And if it is not good for stocks, it's also not good for Bitcoin, okay, because the stock market is a leading indicator for what Bitcoin is doing. If, of course, they announce rate cuts, I think it makes sense to you, right, that when it's cheaper to borrow money, then the stocks rise, risk assets such as Bitcoin rise. Also, businesses are generally more optimistic because it is easier for them to invest in new projects. It is easier for them to also find clients because everybody has a little bit of an easier access to money. And then this is what I mentioned, the QE and the QT. Quantitative easing means more liquidity for the markets. That is bullish for markets, of course. So you have to imagine this is the central bank and it is a big buyer, right? A huge buyer. And of course, it buys financial instruments. It buys bonds and stuff like that. So if the bank says we're going on a shopping spree, that means money for the markets. That's how you have to think about that. Okay, so you always want to wait for, in order to become really bullish in crypto and in the stock market, you want to wait for QE, right? And of course, the opposite of that is quantitative tightening, and which is bearish for the markets. Now, the central bank cannot just do whatever they want. They are a real bank with real accounts, and they have to make sure that something is in their accounts and that their finances make sense, right? So to some degree, of course, they have to navigate this complex landscape. They cannot, for instance, buy stuff off of the market if there's no money in their treasury. Okay, so but that's where the whole thing comes in with inflation and printing money. Because if the central bank needs money, it has the power to kind of say, we'll print more money. We'll print more money. That's the whole problem of inflation and of dollars being printed, which is something that cannot happen with Bitcoin, for instance, because Bitcoin can only exist in 21 million Bitcoins. There can never be more Bitcoins. So now let's go into the more interesting part, maybe more applied part with it, which is trading with a moving average. So what is a moving average? It is something on the chart that is essentially the average of, typically speaking, the last 50 days, okay? And we have two types of moving average that we typically want to compare to each other. The simple moving average, which is the one we look at today. The MA is kind of a synonym for the simple moving average. And what you usually want to look at is different time frames. So the 50-day moving average is, of course, a short-term trend indicator because it only looks at the average of 50 days, compared to the 200-day moving average is a long-term trend indicator. So these give us trend signals, right? If the price crosses above the moving average, is a buy signal. If the price crosses below, is a sell signal. And this is essentially a very simple strategy that you can apply if you want to trade any asset, but also specifically Bitcoin. So let's look at what that would actually look like on the chart here. So let me see. Gotta just make sure I find the right screen to share for you. And here we go. Okay, so this is a software that I use called TradingView. And what I have on here right now is 2 moving averages. This is the daily time frame. We have 2 moving averages. The 50 is in red and the 200 is in green. Okay, so of course, what that does for you, and we're looking at, let's look at Bitcoin, by the way. So we're looking at Bitcoin here. This is November, and this is now. And you can, of course, see this was the Trump pump. And what happened here, can you see this cross? I'm not sure if you can see it. Let me make it larger. So this cross is a bullish cross, because the shorter moving average, the shorter time frame of the 50-day crossed the green one, the 200, and that is a bullish sign, right? So we have the Trump pump, and price moves up, and then we, of course, had this long phase, where price was chopping sideways. You know, the mid range of that was roughly $96,000, $97,000. You can see here specifically $97,000 for many days, too many days. That was what price was chopping sideways. And then here price is starting to go down. Okay, so we have a very easy way for you to find out, are we in an uptrend or a downtrend? That is what you need to know first. Of course, this is an uptrend because the 50-day moving average is going up. This is a sideways trend because the 50-day moving average is going sideways. And this is the downtrend. Now, we're in a downtrend currently. And more specifically, we are also at risk of these 2 moving averages crossing each other's again, right? You can easily see that this could happen here very soon. And when this happens, of course, when the shorter time frame average is going underneath the longer time frame average, that is a very bearish sign. Okay, so that's a very bearish sign, and that could also be, in combination with other factors, of course, mean that we are officially in a bear phase of the cycle. So you can see right now we are in no man's land, especially for those of you who need to conserve their capital. We don't really know what to do right now, and we have to wait until either Bitcoin finds most likely support at around $74,000, then see if this actually becomes support. Then I personally would consider jumping in here again, and then there might be a final leg of the bull run. So that is a possibility that I think is plan A for me right now. And plan B would be, you never know, we could also push back up here, and if we find support above, let's say, yeah, what is this here? Yeah, above 96, around 96,000, then you can consider buying in here for Bitcoin, right? This is not the dollar cost averaging strategy, by the way. This is just for swing traders who are very conservative and who want to just follow the trend. Okay, so that is, can you see the power of just a very simple concept of moving averages? Very simple concept. Now, there is another way where you can use the moving averages to help you trade if you want to be a little bit more engaged, and that is you can like take, for example, the 21-day moving average. So in you would bring those up, moving average, moving average simple. Bring it on my chart. Takes a moment to load. This is the 200-day moving average simple. I changed that to the 21, and I make sure I just took like, I make it yellow that I know is a different curve to look at. Actually, let's make the other ones disappear. So now one strategy that you can use is whenever price closes above the moving average, which would be here, here, and so that's when you are buying the asset, right? And essentially you would be in the market and exit here. Okay, so here you would be in, and then during this phase you would sit that out. Okay, so that's a minus, and then in this phase you would be in again, so it's a plus, and this phase you sit it out, that's a minus. So very, very simple strategy, following the moving averages like that, but very effective, truly, truly very effective. I can only tell you, give this a try. You can do paper trading first, and you'll see this will give you results that most traders don't get. It's very simple. So of course, what you want to do is you want to combine those things that you learned today. So understanding now what it means when the Fed makes certain decisions, and combining that with moving averages, understanding that you can never or should never trade against the trend. Now you know how to determine a trend. Now you know how to interpret the signals that the Fed gives. You also know about the difficult mission that the Fed has, right? So we gain appreciation for that authority, and it's a necessary evil to have, I would say. As much as I would like to have a Bitcoin-only world, I understand that we are far away from that. So until that happens, when that happens, we need to just make sure we understand how to play along with these important economic players, such as the Federal Reserve Bank. All right, that's it for now. Today was very educational, wasn't it? And that's also something I want to provide to you every now and then, because it's really only with understanding and applying that you will start making money. But here's the thing, and that is something that is only for those of you who join my community through the link here, crypto.lifestyle. This is all I'm explaining to. I just explained to you how you go and dig for gold, right? But as I like to say so often, when everyone is digging for gold, you should be the one selling the shovels and the wheelbarrows. You should be the one renting out the rooms where the gold diggers sleep. And that is done in decentralized finance for the world of crypto. It's very powerful. One of the powerful ways is to be a liquidity provider, but you need to know how to do that. Remember my analogy at the beginning, the bar. If you are the one who makes sure that there's always drinks, so whoever comes and buys and sells drinks, no matter what happens, you get your share from that business. Okay, that is what I teach as part of my crypto flow formula, and it takes some time. It's very complex, but it is something that I master, which is essentially the foundation of my financial freedom. Is really the backbone of it is in decentralized finance. So don't wait any longer. Join my community. Go to crypto.lifestyle, give me your email, and as a thank you, you will get a video that explains how to dollar cost average into Bitcoin, which is always, always, always a good sign. I never stop a good idea. I never stop doing that. You automatically also become part of the Crypto Alliance when you join one of my boot camps. So definitely don't miss the boat on that. We are financial pioneers, and we are doing something that a lot of people are just too hesitant to even try. But I can tell you, the fun in life, the real fun starts when you do all the things that you are worried about, and that probably includes a little bit of crypto these days. Is that not right? Awesome. So that's it for today. If you have any last minute questions, put them in the chat right now so I can address them. They can be about anything. If I know the answer, I'll give it to you. Tomorrow, I don't think that I'll get around doing a live show tomorrow because flying back to the United States, and that is, likely in the morning here. We'll catch the ferry first, then the train, then the plane, and then we'll be in the US. Definitely missed the US, although I've really enjoyed Amsterdam as well, and Cape Town. We were in Cape Town not too long ago, and before that we were in the UK. So definitely the crypto lifestyle par excellence. That's it for now. I don't see any other questions. Thank you for your patience and for your viewership. I'll see you again on this channel here very soon. Bye-bye for now.